Facebook. So it just takes a second to get all that going. Oh, Scott, our sound check's here, and we sound good. It's like we're learning. It's like we're learning things. David, you talk for a minute so everyone can hear what's going on.
Yeah, so I mean, I hear somewhat of an echo on my side, but it may not be an issue for everybody else. So if we're okay, then I'm okay.
Scott on Instagram, how's our echo with David talking? Because Mikey, you can maybe just turn down at my side here, the monitor here, because I got him in my ear. And what's up, Facebook and LinkedIn? We're back again.
There you go.
Yeah, okay.
Yeah, whatever Mikey turned down, that now we're much better.
All right, bug fixes out of the way. If you're hanging out with us on LinkedIn, Facebook, or Instagram, Dave does have a slight echo. We'll keep working that up. It's probably coming from me, but thank you. Oh, so you are echoing on Instagram. Okay.
All right, hold on.
So, Ahmed, is it echoing? David, you talk. I got you in my ear. Can we hear him on Facebook? You know what? But you're muted on Facebook and LinkedIn. They can't hear you over there. You muted yourself on there.
Perspective. So, all right, I've unmuted on there. So now we can probably hear me there again.
Yes, and it looks like maybe Instagram fixed it too.
Yeah, because now, yes, actually, I have no echo. I'm good.
Hey, we did it. Okay, bunch of old middle-aged men figuring out technology. This is amazing. All right, let me kick. Welcome to another Loan Depot Live experiment. There are very, very few mortgage companies going live these days, and I think it's because it's uncomfortable. But there's great stuff to talk about. My name is Alec Hanson. I am the Chief Marketing Officer. Sometimes I get to be the Chief Education Officer here at Loan Depot. And we decided, David and I, and I'm going to introduce David in a second, we decided that we were going to go live every other Friday and talk about one of the best and most misunderstood mortgage benefits out there, the VA home loan, the VA benefit. And so, David, I'm going to cue you up, but I want you to introduce yourself to everybody. David Smith runs our national VA program. The guy is a veteran. The guy is a stud. And our entire intent today is just to explain and demystify what the heck's going on with this product, how it's changing, how to use it, what to look out for, what are the pitfalls, demystify it. And then if you've got questions, man, throw them in the comments, ask away, and we will answer it and get you what you need. The entire intent of this is to give you the education to make great decisions about what is best for you in the financing world, and the VA product is an unbelievable benefit. So David, introduce yourself, give everybody your background, and I'll just sit here and look pretty.
Yeah, you got it. Yeah, so I'm former Army. I served a total of 8 years in the military. So I was Army, ended up moving over to the National Guard as well late in my career. But been doing this side of the world for a long time, just really focusing on the VA mission, helping our veterans understand, helping our real estate agents understand what's really happening with this program. So moved into this position, Vice President of VA Sales for Loan Depot, really focused on education. We want our real estate agents, we want our veterans, our active duty service members, even our own loan officers to really understand how this program works, because it is truly amazing. So it's something Alec and I talked about this last time I was here, but this was a big mistake that I made. And this is why I'm so passionate about this is when I very first got out of the military, my wife and I moved back to Houston, Texas. I was moving in to buy my first home. I was personally told that a VA product was not the best way to go. I should use a different mortgage program. And so we purchased our first house not using VA because our loan officer and our real estate agent both told us, use something else. Well, that program ended up costing me a ton of money. It took me actually learning how the VA benefit works to realize the bad decision that I actually made. And so I've really been focused on this now for 13 years, helping people understand that this program really is just absolutely amazing. And I say it all the time in all my educational videos that we do. This is one of the greatest benefits that we've actually earned the right to be able to use. So spend a lot of time with it. I love it. And I get a chance, Alec and I, we get a chance to just kind of, sit around and talk about this every couple of weeks and talk about some of these myths that are out there. So, Alec,
well, dude,
where are
yeah. So we gotta cover up some past ground really quick, because Last time we were live, we hit some incredible topics. And, you know, we're going to, because, you know, not everybody, the world doesn't stop when someone turns the camera on. We gotta go through those real quick and just kind of high level hit it for everybody, because it opened a lot of eyes. It gave you a lot of ideas, and it really helped. So first one, the VA loan limit. Brother, unpack that. What's the history? What's the story behind the loan limits of VA?
Yeah, it's a great question. This one comes up quite a bit. So when it comes to VA loan limits, for a significant period of time, we've always been, restricted as to what the VA would insure, or what the VA would actually, grant us the ability to do without having a down payment responsibility. But January 1st of 2020, the VA made one of the greatest changes ever. And what they said was this: we understand that our veteran community needs more buying power. So what they said is we could go out there and we could buy a home for anything that we can financially qualify for. And this is absolutely huge. So what we're seeing for the first time ever is that we can get 100% financing for a $2 million property, a $3 million property. If our income can justify it, if our credit score can justify it, if the mortgage company can justify it, you still have to qualify. Of
course.
But the VA says, hey, man, we're going to insure you, and we're going to back you up. We're going to let you get 100% financing. We're going to let you get competitive interest rates. We're going to make sure that you're not having to pay mortgage insurance on this thing. And that is, it's just one of the biggest game changers ever. And it's unfortunate that when this actually rolled out, just happened to be right at the start of COVID.
Yeah, I was going to say, what else is going on in 2020 that might have distracted us a little bit?
Yeah, exactly. And so, so you see all that happening, and you go, you look at it and you say, man, I want people to understand this, because there's, California and Hawaii and Alaska and New York, and there's different markets throughout the entire country where VA's never been an option. It just wasn't considered. It was always, it was always something you would do something different. And today, dramatically changed. VA is becoming one of the greatest programs out there. It's super competitive with all the other mortgage programs, and now it can be used everywhere. And that's one of the exciting things for us.
I just want to make a comment real quick on down payment. One of the things that is just, I know it's not necessarily a myth. I think people understand this, but even a guy earlier on Instagram that joined was Alex, and he mentioned about, got a zero down program for me. And I'm like, we do for veterans. We have a normal one too for an FHA program, but like for veterans, zero down's such an advantage. But I want to unpack this. You're of course not limited. You don't have to. You can put more down. You can put down as much as you want, but the ability to remove that barrier for some of our veterans is what is unbelievable. And then the ability to stack no MI on top of that, so now it's more affordable. It's a huge thing. But like, you don't have to do zero down. You can do whatever you want, whatever fits best for your situation. But man, what an advantage to have that available. So and now with no loan limits, brother, like it's game on.
Game changer.
All right, so we had to cover that, because for those of us that didn't join the last one or new or just watching now, like the ability to get a $2-3 million loan at 100% financing as long as you qualify is an amazing advantage for vets. Unbelievable. So we also busted a big myth on the last one, and so we gotta hit that from the high notes here. It's how many times can I use my VA benefit? Right. So like unpack that. Yeah.
Yeah, this is crazy that we're still talking about this, even
But there's also new veterans. There's new veterans every day that that are entering the housing market, and so that of course they don't know. So we're gonna keep hitting it. But yeah, go for it, man.
We can use our VA loan as many times as we wish. It's just that simple, and we keep running into it. We keep hearing it, and it's I hear all kinds of stories. Hey man, we want to use this for our forever home. Hey, or the exact opposite. It's only a first-time homebuyer program. Yeah, it's neither. It's neither. You can use it as many times as you wish. Yeah. I personally have already used it multiple times. I know a lot of people who've used it multiple times. It's that this is one of those myths that's out there, Alec. It drives me crazy. I hear it constantly. In fact, there's been companies who've gotten in trouble for telling people, hey, you can't even use it while you're on active duty. It's only a veteran benefit.
That's a great call out, dude.
And you sit there and you're going, this is where all these myths start to kind of, start to perpetuate, and you start to hear them over and over, and then people start to believe them. That's why we have to do things like this. This is where we sit there and we say, use it every single time.
Dude, I got to unpack a story here, because active duty, using it in active duty have access to this product. And, I was talking to our homie Chris Lee, who's a great originator out in Hawaii. And he told me a story that it burned into my brain. And I'm going to tell it every freaking time I get the chance. He told me that the reason he's so passionate about this and got into this field and this whole thing was because he was PCS'd 4 times during his service. Yep. And, for citizens out there who don't know what that means, permanent change of station, he was moved. They moved him. You're going here, you're going to move here. And so every time he moved, he rented, of course. Like, that's what you do. You move somewhere new, that's what you think. Yeah. And the reality is that he could have he told me, this is his words. He's like, I could have done a 0 down VA loan every time I was PCS'd. And I could have owned that house that I rented for the years I was there. And then when I got moved again, I could have sold it or turned it into a rental and bought another house at 0 down at the next place. And look, it wasn't that that was the best financial decision for himself. And he was like, I would have done that. He's just like, I didn't even know I could have done that. And if I would have known, I probably would have made different decisions and set myself up. And when he got out of the service, maybe he would have owned 4 rentals. Yep. And as opposed to coming out having just rented his whole time. So, bro, number of uses is just such a great conversation.
It's one of those things, especially serving active. Yeah, we move constantly, and because you're always a little bit in flux. You don't know what's going to happen. Yeah. The easiest thing is just just go rent.
Of course.
But then you look back at it and the decisions that I could have, should have, would have made are dramatically different now. And that's, this is, when I served, there wasn't, people like you trying to educate and trying to show us that there's a better way, and that, now we look at it and say, look, this is the way these programs work. This is how they work. This is how you could use this to better your life in the long run. Those are the things that actually matter.
All right, brother. So the last one we hit on the last meeting, what we got to do it again for everybody that's new, was service-connected disability and what that all means with VA. Yeah. So unpack it. Tell us the story. Let's get that out for everybody.
All right. So this is a game changer. So for everybody out there, and we know that it's roughly 30% of the entire veteran population has a documented service-connected disability.
Yeah.
Right. If you have a documented service-connected disability, and you are receiving income for that service-connected disability, a massive amount of fees on the VA loan go away. It's called the VA funding fee. This is a cost, a closing cost for using this program. But when you have a service-connected disability, that is completely eliminated. It's eliminated every time you use the VA home loan. It's eliminated if you're doing a refinance. It's eliminated if you're doing an interest rate reduction loan. It's completely gone.
Yep.
And so for the 30% of the folks out there, like me, I have a documented service-connected disability. I never have to pay the VA funding fee again. And that makes a VA loan, it's a rocket ship. It's unbelievable how it's amazing. The VA loan is extraordinary by itself. And then when you start eliminating fees, it's hard to compete with. And so we know that there's a lot of folks out there who run into this. There's other folks in this category as well. Maybe if somebody is a surviving spouse, they would run into this program. If somebody's active duty, if somebody's actually serving our country right now and you've been awarded the Purple Heart, you're exempt from a bunch of these fees as well. And that's, these are the things that we want people to know, because that's what takes extraordinary and just takes it to a whole different level. It's unbelievable. So
we got to do the call out here, right? This is our moment. I have my note here because
I got it.
We got asked a question, and it's a dang good question, and you have personal experience in this.
Yeah.
So let's talk about the situation where, because you have to, in order to get this, you have to have your service-connected disability documented, right? You have to have it documented. Right. Which how long does that take?
Ooh, well, that right there, that's a process.
It's a process.
It's a process. My particular one, it was an 8-month process.
Okay.
So the date I went in to start that disability payment or start that disability process, you go through several meetings with the VA hospital, several different examinations, all kinds of things, and then they make a decision. They make an official decision. Mine personally took 8 months.
Yeah, and so this is the question. in those 8 months, let's say you wanted to go buy a house. Let's say you wanted to go buy a house in those 8 months, and you don't have the documented service connected disability paperwork, so you're going to have a VA funding fee because it's not documented yet.
Yep.
But then you get it after you buy your house. Can you get a refund? Can you get that money back?
You absolutely can. And this is one of the greatest things I've ever seen. This is a game changer on VA because we know that they know that it takes a while. So here's the deal. When you go get a service-connected disability, it goes all the way back to the date that you turned in your paperwork to start that process.
Guy, write that down. Like,
right there. It goes back to the date you started your. So for everybody who out there who thinks that you're probably in a situation where you do, you need to actually get started. This is not one of those things you want to procrastinate on. Trust me, I know. I waited 7 years before I started. So, if you think that you probably need to get reviewed for something, maybe tinnitus or something else that's going on, start it early. Once you turn in that paperwork, it goes all the way back to that start date. You will be paid from the disability standpoint. You will be paid the entire time that you were going through that process, but from a funding fee specific situation, which is what Alec's referring to. If you are awarded a service-connected disability after you've closed, but you started that process before, the VA will refund the funding fee. And to answer the question, I confirmed it. I've actually talked directly to the VA. You can get it one of two ways. You can either do a principal reduction or what most people choose, you can get paid back in cash. It is paid out on the first of the month, just like a disability payment. And that's amazing.
It's like a mic drop moment. So like for anybody in this space who are like, wow, I got to wait to buy a house. I got to wait because I submitted my paperwork, but it could be 8 months. It could be whatever. You do not have to wait. They will refund it. And for those that are lay people, like principal reduction means we put it against your loan and your loan gets smaller, right? Or you just get cash. So, dude, those are the big 3 we covered last session, Dave. So, so important to recap those, and just give the information out to everybody. So, well done, everybody. Well done, dude. Great stuff. Yeah. But let's talk about something new. Let's talk about something new. All right. So we live in a current world where interest rates for a lot of people they got loans with low interest rates, and interest rates have come up. So we know we're in a kind of a frustrating world here where people have homes, they have low interest rates. And rates are higher than that now. And so people are whatever, all these things. And so what's become in vogue or popular to talk about are assumptions, loans that can be assumable, meaning you go buy somebody's house and you now take on their mortgage. They transfer effectively, that mortgage is transferred to you. So you now get to assume their low rate. And so you see realtors talking about this, people interested in this, they want to know what's possible. And VA loans are one of the products that qualify to be assumed. Yep. Not all loans qualify. So VA loans qualify to be assumed. But man, there can be some little traps in there and some issues. And so let's talk about it.
Okay.
So how does it all work? What's the process? And what are the pitfalls specifically that a veteran should be aware of before maybe letting somebody else assume their loan?
All right. Cool, you're bringing up a good one. So this one comes up all the time, and so I'm just going to be honest with you. One of the first questions we get is, can anybody assume your loan, veteran or non-veteran? Is what I mean by
100%. Yep.
The answer is yes, but there's going to be dramatic differences in those two situations. Okay, so I want to explain this. First of all, the assumption process. When you start looking at doing an assumption, you have to actually work with the company that is servicing that loan, right? So whichever institution that the person is making the payment to, that is the company who's going to go through, and they're going to do a pre-approval. They're going to make sure that the person who's moving in is even eligible to do that assumption. Okay. Yep. Now I want to talk about veteran versus non-veteran. Okay. Number one. In the situation where it is a veteran assuming another person's loan, okay?
A veteran assuming a veteran's loan, right? Yep. Right.
Correct. Yeah, okay. A veteran assuming a veteran's loan. What will happen is the veteran who's going to assume it has a certificate of eligibility that says they're eligible to do a VA loan. We will use that to replace the current homeowner's certificate of eligibility. Meaning what? It's a clean transaction. It's a clean break. This person now took over the loan. Their certificate of eligibility is now on that home. And as the seller who sold the home, when I go buy my next house, I can do, I can use my VA loan to go purchase the next house without any restrictions. It's a clean break. Now, it is the opposite. If somebody is not a veteran, okay, and they're coming in to assume that loan, the certificate eligibility, because they don't have a certificate eligibility from the VA because they never served our country, your certificate eligibility has to stay on that house, which means two things. Number one, when I go to buy my next house, I may be restricted on what my buying power looks like because I have my COE over here on the first house. Number two, and this is the one that is why it bothers me. Number two, let's say that I leave my COE over here with this other person who got to get my incredible interest rate. Yep. They got to take over my mortgage. All of these things are great things. But let's say 5 years from now, Alec, 5 years from now, they go into foreclosure. Guess who that comes all the way back to burn? It's me. It's my certificate of eligibility that's sitting on that house. It's my COE that's now in jeopardy. And it's now me who has a blemish on my VA record. I will tell you personally, anybody can assume a loan. It can be the veteran or a non-veteran. I served. I would be very, very hesitant. Let's just go with that.
Yeah,
to let somebody who didn't assume my loan.
Yeah, we're not trying to tell people what to do, obviously, but yeah. I think people get the vibe, like, proceed with caution, ask questions.
Yes.
Don't make a decision without being fully educated and knowledgeable about what the potential ramifications can be, because who wants, like, that experience that you just talked about with the foreclosure, it's bad.
If it's veteran to veteran, we swap those certificate eligibilities and I get to move on with my life.
Yep.
If it's not veteran to veteran, my COE stays. And that's the only thing that would caution me, because I earned that. I worked for that.
Yep.
But I will tell you this, other things to pay attention to. I know that we talk about this with the VA Council a lot. And so at Loan Depot, we have an entire VA Council made up of amazing people, and we get a chance to discuss this quite a bit. And other things to consider. Number one, the process is not, it's not going to be extremely fast. It does take a little bit longer.
That's a great comment. It's not a normal, it's not a mortgage. You're not doing a mortgage, guys. It's the whole thing. Yeah.
Yeah. Yeah. So it's going to take a little bit longer to get completed, right? Number two, the other thing that we have to pay attention to, in a lot of these houses, you'll see, in a lot of these houses, people may have a significant amount of equity. Right.
Yeah.
The homes have appreciated. The homes are worth a lot more. So let's say you're buying a $500,000 house for easy numbers, but the loan that you're assuming is $300,000.
Yep. So there's a delta of $200,000.
What are we going to do? How do we accomplish that? Because you don't get to the assumption is you're only assuming the $300,000.
That's right.
So now we got to figure out how to solve the other $200,000. Do you have the cash to do that? Is there a secondary market that's going to allow us to do that? Like, what are the options that we have on that?
Yeah, and so Sue in Facebook asked that question. What do you do if buyers need to have, like, more cash and they're not a veteran? They can still assume it, but they need the cash now, and you got to go find a second mortgage, and it's a mess. And so
we got things to do. Yep.
It's just part of what makes assumptions hard. It sounds great. Oh my gosh, this veteran has a 2-3% rate. Rates are 7 right now. I want that rate, but there's considerations for you, the veteran, that are giving somebody that COE, and if it's not a veteran, and it's complicated. So I'm glad we talked about it and tackled it, because I feel people need to be educated on this. They need to know, and they need to be prepared.
In some situations, and I'm going to say this, and I want to say this, in certain situations, it's amazing. It really is. It is absolutely extraordinary. Somebody has the ability to pay that delta. Somebody gets to take on that rate. Somebody's going to qualify. It's not terrible to ask. The only thing I want you guys to know, the ones who've served our country, our real estate agents who are trying to help our service members, just understand there's a lot of moving parts to it. It's not just that cut and dry. And anybody can assume the loan, but there's just differences that we have to pay attention to.
All right. All right, we got a big one here to kind of on our last piece of the day. One of our big questions that I wanted to ask you about and talk about: are all VA loans at every company the same? And let me frame it up more. You know, because for this is a little bit of the like mortgage, you know, information about what happens behind the scenes, but the guidelines. Where do the guidelines for the VA loan come from? Let me just start there.
Okay. Yeah. So the VA is going to give us our guide rails.
Right? So the VA. So
directly from the VA. Here's where you can play.
Yep. Here's what we would here's the loans you can do effectively, right? And so they give those guidelines out to everybody. They publish it to the entire world and say, here's the deal. So when I say are all VA loans in every company the same, David, how do they turn different? What's the issue here?
Yeah, this comes up all the time as well, right? And this is where, you know, I want people to understand that every single company is going to be a little bit different, right? So what does that mean? So we have the guide rails, as I just mentioned. We have to, you know, from that standard, we've got minimum property requirements. We've got, you know, every mortgage company has to evaluate credit, has to evaluate assets, has to evaluate the property appraisal. All of those things are the same. Right, every single company has to operate within what the VA says is, you know, or what we have to do.
Yep.
Here's things that change. How much of a down payment does a mortgage company require? That's a company decision. What interest rate is a mortgage company going to provide? That could be dramatically different, right? Yep. What credit score is going to be required is a company decision, and every single company is different. Alec, I just told you a story, and I have to say it, right? We had a situation where there's a veteran who had, I want to say it was around a 617, 615 credit score, and the company that they were talking to told them, I'm sorry, you're not eligible, because their minimum credit score criteria was a 620. So they weren't where they needed to be. So now maybe there's credit, you know, we got to do other things to help them. But is every company, does every company have a 620 credit score?
See, this is such. So let me just, here's the language for everybody that's following this that is, you know, trying to understand mortgage. What David is talking about is something called an overlay.
Yep.
It's a risk-based overlay, because even though, and by the way, this is true for conventional loans, FHA loans, it's true for everything. Even though the government has told us, here are the guidelines for this loan, every lender chooses if they're going to add layers of, quote, risk protection or overlays on top of that. And that's because that's how they're going to do business. So the government does not say, VA does not say, you have to honor these guidelines. They say, these are the guidelines we accept, but you can be more stringent, or you can change, you can't go lower, but you can go higher. And so this is the thing that, I mean, I get as mad as, I can tell you're pissed about this, because no, it is. It's really, really upsetting that a veteran who gets bad information, gets told by some lender who has an overlay. And by the way, sometimes the salespeople, I mean, I was a loan officer for a long time. I ran production for a long time. You know, sometimes the loan officer just looks at their guidelines and goes, well, that must be what the guidelines are. I looked at it. That's what it said. They don't even know. So that's even worse. But often they're telling somebody misinformation, and then the veteran goes, well, I just don't qualify. I must not qualify.
Yeah, but it's worse because now that veteran says, I don't qualify. Let's say they're active duty. And now they walk back to their platoon and they go, man, do you know you need a 620 credit score to get a VA loan? That's crazy.
So the bad information is flowing around.
That's all. And now the whole battalion knows this, and it just never ends. And it gets so frustrating to me because what people are being told they think is concrete, and it's not. It's a company specific overlay, like you mentioned. So here's what the VA says. The VA says that we have a responsibility. We as a mortgage company, we have a responsibility to make sure that this veteran is actually eligible. Yes. Make sure that we're putting them in a good situation and we're not setting them up for failure. That is our job. Our job is to evaluate several different things. We may set overlays because we don't want to set them up for failure.
That's right.
But there's situations where I will tell you, like early in COVID, prime example, early in COVID, in the mortgage world, speculation, uncertainty. Nobody knew what was going on. We saw mortgage companies change their credit criteria to 700.
Yeah, we saw a lot of different people changing a lot.
Because nobody knew what was actually, a lot of fear. They didn't know what to do. So the best thing to do was, well, just don't lend to anybody. We're terrified, right? And so things kind of go down. But my point to all of that, to get it all the way back to the original question, every single mortgage company is a little bit different. Every single mortgage company has different criteria overlays that may make somebody eligible or not eligible. And I say this to people all the time: just because somebody told you no, it doesn't necessarily mean no. Just because somebody told you yes, doesn't necessarily mean you're getting the best deal. As a consumer, you have the right to truly evaluate and make sure that you feel comfortable, that you feel confident, that the people you're working with are actually looking out for you.
Yeah.
That's what matters.
So here's the punchline, everybody. The punchline is ask questions, shop around, talk to professionals that know the game, and do your homework and get educated. That's the punchline. Because even though a mortgage company might say, here's what this is, call another one and be like, what's your deal? Like, don't just assume that because you're a veteran, you're getting a VA loan, that every guideline and every company is the same. Don't make that mistake. So just get educated. And that's our point. Like, I can sit up here and tell you to call Loan Depot all day long, and we want you to. Call Loan Depot. We're fantastic. But
I love what we do.
But just whether you use Loan Depot or use anybody else, this is the information you need to make really good decisions.
Yeah, I'll tell you, and I'll make it, and I'm going to say this. I'm going to say that with a ton of passion, because I want you to understand it. If you walk in and your heart says, I want to get a VA loan, and the person you're talking to says, I don't like VA, I think you should consider something else, I'm going to be the first person to tell you, you should be considering someone else. Because, I'm just saying.
Thank you.
I've already made that decision. I lost a ton of money. I regret it. And I look at us. Hey, I know what we did. I know what we went through. I know how we earned this benefit. Yep. I refuse to listen to somebody tell me that it's not worth it.
By the way, I just realized that I have aged myself terribly because I did this for a phone and a click, and that's not how people hang up phones anymore. So yeah, exactly. Just red phone them. It's all over. I'm old. I'm trying. All right. So David, we crushed this today, dude. You're the man. Thanks for the education. Thanks for just the positivity. Thanks for bringing all this knowledge. If you have more questions, put them in the comments. We're going to be back again live in a week and a half, maybe 2. And we're going to tackle VA renovation. We're going to bring a ton of information at you guys to keep you educated. Because, by the way, the VA renovation loan is the best loan in the world for anybody getting a renovation. Oh, my God. And so we don't have time to dive into it today, but it is the best loan in the history of the United States. And it's going to be really fun to talk about it. So, David, any final comments for anybody about this?
Guys, I will tell you this. Obviously, I'm proud of Loan Depot. I love what we're doing. The team is amazing. Big believers in education and just really getting out there and supporting you. And so if you have questions about buying a home, you have questions about how the VA loan process works, we're here for you.
We got you. All right, everybody. Have a wonderful rest of your Friday. Drop questions, drop direct messages. We're here for you. Take care, everybody.